Well, we have chaos starting, well, momentarily, depending on when you're watching this video. Cue the fire a second time. We have earnings coming in tomorrow. Complete chaos in the banking system. Once again, we have Wells Fargo and good old JP Morgan kick off the chaos. And I say, let's just cue the fire and start this recession. I mean, guys, when you have the Fed, which is never allowed to use that word, uses that word, you know it's going to be bad. Also, make sure you are subscribed tomorrow. I have a great video for you. I've been putting it together, working with Steve a little bit on the complete and utter collapse of the dollar and what is going to unfold. You have people like Ron Paul, Peter Schiff, you name it, former secretaries of whatever are saying it's about ready to go. So we're going to do a deep dive tomorrow. You're going to want to see that show. Also, why this chart? You know what happened? You know what happened right there? That is when we went off that dollar standard. See? US CPI year over year through the roof. And it's because of that. That is why we have to teach our kids. You need to learn about this, how to do it, how to always be moving money. Money always has to be moving because the money that is in the system is only debt. It is a debt-based system that has to be paid back with interest. So where are you going to get that interest from? Oh, you're going to have to work really hard. Well, unless you know how to move it. And yes, I know this is not breaking news, but it's the bank news. These are bad stories. And it's all because of the banking system. Oh, also, yeah, 521 billion deposits drop. I'll get to that in a second. But also with all of this fiscal insanity that's currently taking place in the banking system, in the government, who is going to pay for that? Oh, I'll give you 0 seconds to think about that. That would be you. The government borrows $6 billion a day. We have what, $1.1 trillion shortfall already? Come on. I thought you guys were tightening the belts. Billions and billions and billions a day. And you are stuck with it in your taxes. Boy, I mean, the system is just set up from when you enter school of complete failure. It's like whatever they tell you or teach you in school, just do the complete opposite, right? They're like, go to school, go to more school, spend half of your life in school with large amounts of debt. Go work, save your money. While you're saving your money and your money's going the wrong way, all these backdoor deals are going out, completely taking away your money. You know what? They need to do this in school. Don't go to school. What else? Become a politician, own a bank, and steal everyone's money, and then pass it on to the people that were doing the right thing. It costs $22 billion, thank you, banks, to rescue 2 failed banks. Now the question is, who will pay? Well, thank you, David. I will answer that. That would be you. Even though I know the politicians will go, oh no, it's actually not. It's going to be over here. Look over there. Oh, look at the orange guy. But you guys all know who's at fault. And again, everyone's going to point finger. Even look, check this out. The Fed's going to point fingers. You're the bank. Actually, you're not even a bank, but that's a whole nother story. Fed staff expects banking crisis to cause a recession this year. See, it's not even Jerome's fault. It's not Janet's fault. It is the banking crisis that is going to cause the recession this year. Has nothing to do with monetary policy or QT or QE. Scrolling down to the article, it says the Federal Reserve staff is more worried about the U.S. economy tipping into a recession after the recent banking crisis that they caused. The minutes from the central. Again, you guys, they don't put these words down ever. So if they're saying it's going to be a mild recession later this year, you may want to change that. Actually, I will go ahead and help the article out. Expect a mild depression. It's kind of one word. But yes, Bravo, you don't understand because the market went up today. Let me just highlight that. Today. That's what we do. We trade. We're like, today it goes up, tomorrow it goes down. So macro, be looking for the future. You're probably not going to like it. But again, if the charts tell you differently and all the hedge funds screw our trades up, which I'll get to in just a second, we got to do what we got to do. Wall Street banks to reveal weak quarterly earnings bleak outlook for 2023. Let's go all in. I mean, what could possibly go wrong when banks reveal a 521 billion deposit drop? It's like most in forever. I mean, I know who effed this up, and I know who can fix it. The same person who effed this up. That would be the central banks, right? What? Yeah, you can come over here. We'll give you a 10% interest on your deposit at the Fed. And you would have to have knuckles in your sandwich to not take advantage of that. And that's what people are doing. Everyone's moving their money. It's kind of crazy to think that it's not even money in the first place. And when they give you that money that's not even money in the first place, and you loan it to a bank, 'cause that's what you do when you put it on deposit, it's not theirs, it's not yours, it's not even money. I mean, what could possibly go wrong with this system? But bravo, market went up today. Your short isn't doing well. Okay, well, I mean, I got this. It was like, I got this one, I got that one, I got that one, I got that one. Now I will tell you, let me draw something for you so you can see it. This is actually, and I knew it before the trade. I'm still in on the trade, just FYI. This right here, boop, I'm gonna draw a line like this. Okay, and then I'm gonna draw two more for you so you can see it. You can go like, oh yes, that kind of does look like a possible flag. Let me clone it and move it. There you go. There is your flag. There is your flagpole. And if you want to know where that one goes, you carry that up there to all-time highs, which if you are currently in my swing trading course, and you're like, I'm not doing that with you, Bravo. I'm sticking to what the game plan is. I'll show you what the perfect swing trade in this. That is where you enter there. That's above the 200. That's bullish, okay? I don't trade on bull flags too much. I'm giving you what it is, but those don't play out like other things. But you're above the 200, bullish. You have a bull flag, okay? Bullish. Your swing was there, that little blue one. That's where I took out a long on that one, and I exited right here. You're still actually, if you're in my swing trading course, you are still in this trade on the upside. Because I know a lot of you emailed me, you're like, but wait, I'm so confused. You're not, right, I know, I get it. You're up you're still holding. You're up 4%. Actually, at the, you're up almost 5%. When that candle, also, if you want to learn how to do this, link in the description, 60% off my swing trading course. You start there. Then you can go to my bear market course. We're above the 200, so you have to treat it as a bull market and trade it that way. When we drop below that little white line, which sometimes it's blue, I change my colors all the time because I get bored, you trade it in as a bear market. That's why you take my bear market course for 60% off. But at the end of the day, you always have to be moving money. You're not going to keep up. It's musical chairs. That is unwise of you just to go get a job and save your money. That's not going to work. You also on the NASDAQ have 2 years of flat, negative, nothing. What are you going to do? But I get it. You're a bad boy, bad boy. What you gonna do? What you gonna do when they come for you? You're going to trade this thing. Also, if you want to know when I'm going to exit, you get above that right there, that line, okay? And you find support, I'm out of that trade. Oh, and just in case you want to see who's going to screw this all up, it's the hedge funds. Look at this. Hedge funds are the most bearish. Like I was saying, they're all on one side of this teeter-totter. Whatever this thing is, right? They're all on one side. They're all saying it's all going to zero. And so, but what's going to happen is if it keeps going up, they're like, oh, we got to cover. And then they cover and you have to buy it back at a higher rate. You're like, I didn't want to buy it here. And then the next guy is like, wait, where's it at now? And then the next guy and the next guy. And it just takes off. That's why we have to cover. And that's why we have things called stop losses. Oh, and just to let you know, hedge funds are usually always wrong. And there's a lot of them. What hedge funds like to do is they get up in the morning, they put their tie on, they go to the office, and they listen to Jeremy, who's telling you it's going to be a rough 3 to 6 months. So what do? They look at the news and they trade based on the news. They do not trade based on the charts. And if you want to know where the hedge funds got in on all of this run, I'll show you where I got in. And actually where I even launched my swing trade course, because that's just what I've done my whole life and teach my high school kids how to do this stuff right there. That's where I launched it. I'm like, we're above the 200. Let's go. Now, hedge funds were like, no, we're all, we're all going to die. It's all going to zero. And it just ripped everyone's face off. Then I exited right there, and then I launched my bear market course. But I'll draw it for you based on memory. I think this is where a majority of hedge funds got in. They got in because they're like, man, we just missed a lot, and dumped on its face. I say that's fine if you're into that, Carl. And if you laughed, you and I have the same humor. If you didn't laugh, you're a good human, and keep it that way. It's good. You never had to teach junior high kids, high school kids, college kids. But guys, just to let you know that this chart is bullish. We are above the 200. We had a double bottom over. See here. This is all bullish. I know, but you're like, do you not see what is going on in the world? No, I must have missed that article. Also, for those of you in the comment section that are like, talk about Boyle, talk about UNG. I'll just be a quick one. Guys, we're under the 200. Very bearish. I made one good trade, one bad trade. I don't want to play catch the falling knife from that head and shoulder. Your price target is still lower. It's down here, you guys. Look. Linda, look. Here. Break. All right. You still have a way to go. So make sure you wear chains on your hands. Again, if you're into that. Also, for those of you getting back to the S&P 500, if you are a purist in my course, which you need to be, that's where you got to be. You don't sell until right there. See that line? That's when your MACD crosses. See, I jumped the chewing gum a little bit too early. Right there. You guys see that? Just a little early. Also, one candle close below the Bravo 9, but sometimes Bravo likes to be early. I've no wife jokes on that one. But I say, hey men, if you want to be early, you be early. Cue the fire. Just don't be late to my videos. Never be late. I love you guys. Stay free today. Today's a good free day. What is it? Thursday? Yeah. We'll be free today, and I'll see you tomorrow.